I don't know about you guys, but I find it very hard to be bearish on Tesla right now. With expectations that have gotten massively re-rated lower, and it seems like everyone on Wall Street is bearish on Tesla, that means I'm probably more likely to make money. When everyone is bearish on a stock, you can be set up for a positive upside return, as long as the bears are obviously not correct. And what we've seen so far in 2024 is Tesla's actually shattering record after record in China and in Europe. But this latest round of good news is having an effect on Tesla's stock in after hours, pushing the stock up 2.23% in regular trading and up 0.26% in after hours. But I think it's actually a very small move compared to what we should be seeing in Tesla right now. Now, here in this video, we are going to be going over the option activity for the day today, look at the technicals on Tesla, and discuss what you need to know for markets coming tomorrow. This good news actually comes from Ford earnings. Now, before you say anything, Ford's obviously not Tesla, but I'll make this make sense here in this video. This says Ford tops fourth quarter estimates and guides towards a strong 2024. Ford reported a fourth quarter net loss of $526 million or 13 cents per share compared to a profit of $1.29 billion or 32 cents per share during the same period a year ago. Ford's EPS came in at 29 cents, beating the estimate of 14 cents, and automotive revenue came in at $43.2 billion versus the estimate of $40.12 billion. But here's the positive part for Tesla. Ford's full year forecast calls for adjusted earnings before interest and taxes, EBIT, of between 10 and 12 billion, adjusted free cash flow of 6 to 7 billion, and capital spending of 8 to 9.5 billion. So a little bit better of a guide as far as profitability from Ford. Ford is expected to face headwinds this year, including lower vehicle prices, warranty costs, and continued losses for all electric vehicles. Bright spots are expected to be in its Ford Pro fleet unit and traditional Ford Blue internal combustion engine business. So Ford actually believes they're going to be selling gangbuster amount of cars in 2024. Now, I find it pretty interesting that analysts like Piper Sandler just came out yesterday and they're only expecting Tesla to grow 7% in 2024, yet Ford and GM raised guidance on their last quarter. Problem is, or was, Tesla did not give guidance because, Tesla being conservative, they're like, hey, we don't know what's going to happen in 2024. Do you know what's going to happen in 2024? No. Does the next guy? No. Does whoever else, Adam Jonas, know? Does Dan Ives know? Nobody knows. That's the point. But Ford and GM, they think 2024 is going to be a great year. Whereas Wall Street, they've already counted Tesla out. They're saying, hey, Tesla, you're going to have maybe 10% growth. I'm here to tell you, if Ford and GM are seeing good demand or expected to see good demand for their products, their vehicles in 2024, Tesla is going to smash them, blow them away. Take a look at these crazy numbers. Ford's EV unit lost $1.6 billion in Q4 2023 with a negative EBIT margin of negative 98.2%. Ford says, quote, growth lagged volume due to industry-wide pricing pressure. That's a way of saying Tesla cut prices, and that hurt our volumes. Ford lost $47,000 per EV unit sold in Q4 2023. How do you lose $47,000 per vehicle that you sold? Oh my gosh, that is insane. Q4 of 2022, they were only losing $20,000 a vehicle, and then Q1 it jumped to $58,000, Q2 to $32,500, and Q3 $36,000, and it looks like those losses per vehicle are continuing to ramp. And I do think this is a big upside potential catalyst because Tesla is not priced for good growth. If Tesla does give us good growth and maybe some of the recent advertising efforts are going to mean less price cuts, well, that's a recipe for a massive rally in Tesla stock in 2024. So in all reality, Tesla was the fastest growing car maker in 2023. In all reality, Tesla was the fastest growing automaker in the US in 2023, growing at 34%. Do you really think Ford and GM are going to have good deliveries, good earnings, and Tesla is not? I honestly find that a crazy assumption, and that is what Wall Street is currently expecting. If you look at Ford and GM, and then you look at Tesla, they're counting Tesla out as the year just got started. I think that makes for a potentially big upside surprise in 2024. This news of Ford's earnings is causing Tesla stock to rally about 0.5% here in after hours, even as the S&P 500 is down 0.06% in after hours. It seems like maybe someone out there is starting to realize if Ford and GM have good years, Tesla's probably going to have an even better year. So this is indeed great news for Tesla. What is also great news is Enphase just reported their earnings. As you know, Enphase is a solar company, a battery company, as well as Tesla. That's in fact Tesla's largest segment of their business, batteries, energy, and storage. Well, Enphase up 13.5% currently in after hours. I would say that's also great news for Tesla. Something else that started today, which could lead to a rise in Tesla stock here in the shorter or midterm, is the air somewhat getting popped from the AI bubble, at least from Nvidia. Nvidia was down 1.6% today to close regular trading and down 0.66% currently in after hours. At one point, Nvidia was down 4% today. What happened? Money was making its way into small mid-cap stocks, your interest rate sensitive companies like a Tesla, and that's one reason, a big one, why I think Tesla stock was up over 2% today. Think about it like this. Money is really not coming into our markets right now. So in order for stocks to do well, you need to see money go from one place to the other. So why Tesla and these small and mid-cap stocks, interest rate sensitive names have done poorly over the past 2 years, some of them still down 80-90%, whereas your big tech names have done well. What's happened is the money has went from exterior areas of the markets, small, mid-cap, interest rate sensitive names, cyclically sensitive names to the economy, and that money has went into big tech. Big tech has a much larger weighting than other stocks. Some stocks are not even a part of the S&P 500 or the NASDAQ. And what happens? That money got taken from those names, put into big tech. A lot of that money recently has gotten taken out of an area like a Tesla and put into Nvidia. If Nvidia starts to give back, that money can find its way into small mid-cap stocks, and you guessed it, Tesla. So I think this is a potential new trend that is worth watching. But make no mistake about it, with the S&P 500 trading at basically all-time highs, there are deep problems out there in our markets. One of which came about 12 hours ago, and this really just continues the trend that we have seen recently. Deutsche Bank no longer expects a US recession in 2024, which that's fine. Right? I don't expect a recession either. I think if anything, the economy could actually get better from here. But you are seeing your longest bears turn bullish right as markets are at all-time highs. Mike Wilson, bullish. He was bearish for like 3 years. Deutsche Bank has been expecting a recession for 2 years now. Now they're no longer expecting one. My point is, you've seen a lot of your bears flip to being bullish. Typically, when the bears are capitulating, that's a moment in time in which you can get some downside in markets. It's much the same as when you're going through a crash, like the Rona, and everyone capitulates. And then what happens? That's usually the bottom in the markets. It's the same thing, the upside. When the bears capitulate, that's usually the top in the markets as well. That is a little bit more anecdotal. We have seen other more statistical things going on as well, like the percentage of stocks above their 50-day moving average. That peaked out on December 28th. At 86.5%, which was a very broad-based rally from really November until December 28th. That's coincidentally the same day Tesla was hitting its high at 265, and you haven't been there ever since. Tesla stock basically fell straight down. So did your average stock. Now that only 50% of stocks are above their 50-day moving average, as the S&P is at all-time highs, if you do see a pullback in your big tech where the money has been concentrated and put into even a Tesla and small mid-cap stocks due to the market weighting of big tech as that money leaves and goes into small cap stocks, I wouldn't say any money's getting pulled out of our markets, but you could see a correction in the SPY, in the triple Qs, the S&P 500, the NASDAQ, just based on capital moving from those big tech names to other areas of the markets. Not to mention that on December 28th, you've seen the dollar bottom at about $100 and has now made its way to about 104, which does not sound like a lot, but that is quite a rally in the dollar. Now, this rally back here from late July in the dollar until the basically, end of October, this caused a 10.5% pullback in the SPY. You've gotten basically half of what the move was here. If you went from about 100 to 107 before, you're at 104. You've gotten a little bit over half of that move you got in the summertime, but yet stocks are still at all-time highs. Based on that alone, the S&P should be about 5% lower today. So there are some risks to the broader markets, and I'm not going to act like Tesla would be immune to that, but Tesla's stock has already fallen year to date, even including today, over 25%. I don't think Tesla would be as badly affected if the S&P did fall 5% from here. I think Tesla is already priced in its own bad news. Plus, let's be honest, if you were going to sell Tesla stock, if you were a weak hands from the start, you probably already sold. I think that's a fair assumption as well. And if you're like me and you have not sold and you don't plan to sell, well, buckle up and hold on, because the next couple of days and the next couple of weeks are going to get interesting. As I previously mentioned in the last video, Nvidia tends to run into its earnings, and then it tends to have a cooling off period, even a slightly down period in the couple of weeks after Nvidia earnings. Now, Nvidia earnings will be in about 2 weeks from now, so I would imagine we could get some weakness here in the markets until then, and then after Nvidia earnings, that's where you may get more weakness. As far as the past 2 earnings, really 3 earnings, that's what has happened each and every single time with Nvidia. Hedge funds and institutions today placed 880 orders in Tesla, worth $441.14 million, with a positive order value of 38%. So a little bit more on the bearish side, that's for sure. If we take a look at the volume today, including everyone, retail investors, hedge funds, institutions, money managers, everyone on our markets, you had volume today of 53.35% to the call side, 46.65% to the put side, so looks pretty healthy there. Open interest for this week definitely skewed towards the calls as well. About 61% of all options that are bought and held in people's brokerage accounts right now that expire by this Friday are calls. 39.07% are puts. That is a pretty bullish number for what we have seen recently with Tesla. Recently with Tesla, it's actually been maybe a little bit more puts on any given week, or at the bare minimum, neutral. Tesla has announced that the Cybertruck tour is coming to Japan. It's scheduled to be in the country for most of the month of February. This is great news. I believe the Cybertruck would be able to be street legal in Japan, but to send a cultivating product to Japan, where that's a market, as Elon said on the earnings call, that Tesla really doesn't have any penetration in, there's not a lot of knowledge around Tesla in Japan, that could be a really good way to kind of kickstart potentially sales in the country. This also comes after Elon and Tesla has started to advertise in Japan. That is something they said they would do on the last earnings call. Now, again, another kind of warning sign for investors. It comes from Carl Quintanilla from CNBC. You know this guy. I like to reference a lot of what he posts. He likes to reshare things from JP Morgan in this case, but also different firms, hedge funds, institutions. So you get a good feel of what people are saying out there. So I highly recommend you guys follow him on X. But he shares this. It says, despite Marko Kolanovic's, quote, consistent drumbeat of warnings about stretched technology valuations over at the bank's trading desk, they've reached a different conclusion. It's a good time to buy U.S. equities. Which again, as it says here, Marko Kolanovic has been a bear on our markets for a long time, ever since late 2021. He was correct for the most part, again, in 2022, was dead wrong for 2023, and he's still on the bearish side for 2024. But JP Morgan, the trading desk, is saying, yeah, no, stocks are going higher from here, after an already very parabolic run in just a couple of stocks that have caused markets to rally. I mean, that's just not exactly encouraging to me that the markets are going to continue to rise. Typically, if the markets are going to continue to rise, you want to see a lot of bears out there. You want to see the bears coming out in full force, because that means maybe they're going to be wrong. But when everyone is bullish, it's hard to think that they're all going to be right. Now, JP Morgan, head by Marko Kolanovic, has an S&P 500 year-end price target of 4,200, whereas the average sell-side S&P 500 year-end target price is around 4,950. Some people on Wall Street believe 5,000 is a good target for the S&P by the end of this year, or on the higher side, about 5,200, in which you're already there. If you look at the SPY, you're about $4 away from 500, which would be about a 1.3% gain from here. Even if you went to 5,200, which would be 520 on the SPY, that's only a gain of about 5.3% from here. That doesn't look all that attractive. So your equity risk premium just doesn't make a lot of sense right now. Just in the time of recording this video, Nvidia continues to fall, now down about 1%. So tomorrow is going to be another very interesting day for stocks. Tomorrow pre-market, we will have Alibaba, Uber, which was just incorporated in the S&P 500 because they were profitable for 4 quarters in a row. That just happened. Uber's at all-time highs. If they fall, that could take momentum out of our markets as well. You have CVS Health, Roblox, XPO Logistics, Aries, Bunge, Scott's Miracle-Gro, Berry, and Emerson, actually spelled exactly the way my son's name is spelled, so that's going to be an interesting one as well. Tomorrow, you have PayPal, Walt Disney, ARM, Wynn, Exelis, Confluent, Pay.com, Mattel, NLI, and McKesson that report in after hours tomorrow. Obviously, the big 4 here being Wynn, ARM, Disney, and PayPal. As far as tomorrow, you're not going to get a whole lot of economic data, but you are going to get a lot of European data that will be coming out. Retail sales for a lot of different countries. Some Japan data that comes out tonight at midnight, like the leading economic index. Japan is the largest owner of U.S. treasuries with about $1.1 trillion. Like, I know you guys have heard this before. China owns the U.S. No, it's actually Japan that owns the U.S. So yeah, any of their data can be important for our markets if it has implications for Japan potentially buying or selling U.S. treasuries. Now, tomorrow morning, you will get the balance of trade from Canada. It's highlighted in red here. I don't expect it to be a catalyst for our markets, but there's always a possibility that it could be. Now, coming tomorrow, you are going to get Fed speakers. That's really the big story of tomorrow as well. At 11 o'clock in the morning, Fed Kugler will speak. At 11:30, Fed Collins will speak. And at 12:30, you will get Fed Barkin. And then 30 minutes after that, you will get a 10-year Treasury auction. If you get good demand for the Treasury auction, yields are going to fall. If you get bad demand and people don't show up, then yields are going to go higher. The last auction we had for the 10-year Treasury brought in 4.02% on the yield. You can see 10-year Treasuries are currently trading at 4.09%. So the yield is probably going to go higher, but how much higher? I think that's the big question. If it comes in lower then that's obviously going to be great news. But markets will react at 1 p.m. sharp. Sometimes it's a huge move, sometimes it's a smaller move, but the markets have been reacting lately to these 10, 20, 30-year bond auctions. And then at 2 p.m., you're going to get Fed Bowman, so 4 Fed speakers. And then at 3 p.m. Eastern Standard Time, just to round it all off, you will get consumer credit change that is expected to come in around $16 billion, lower than last month, but still, people are using their credit cards at alarming rates. This news actually came out today that is a little bit on the alarming side as well. Credit card delinquencies surged in 2023, indicating financial stress, according to the New York Fed. Credit card delinquencies surged more than 50% in 2023 as total consumer debt swelled to $17.5 trillion, the New York Fed reported on Tuesday. Total debt rose by $212 billion in the quarter, a 1.2% increase quarterly and about 3.6% from a year ago. $212 billion in a quarter added to consumer credit card debt. That's actually insane. With a total of $1.13 trillion in debt, credit card debt that moved into serious delinquency amounted to 6.4% in the fourth quarter, a 59% jump from just over 4% at the end of 2022. Delinquencies also rose in mortgages, auto loans, and the other category. Student loan delinquencies moved lower, as did home equity lines of credit. Overall, 1.42% of debt was 90 days or more past due, up from just over 1% at the end of 2022. So you are starting to see a lot of delinquencies out there. And if people do stop spending money on their credit cards as much, if they don't have credit cards anymore because they spend all the money and they're not paying them back, that could also help to slow the economy by quite a bit. To me, this does seem like a manageable problem, but definitely a risk nonetheless. And Nvidia continues to get pummeled here in after hours, down 1.30%. Now take a look at this. This is the Wall Street Journal's page for Tesla to look at what Wall Street is pricing in for 2024. And to my point, again, why I'm so bullish on Tesla right now, GM and Ford, they expect to be more profitable. They expect they're going to sell a lot of cars in 2024. Tesla, again, just to refresh everyone's memory, was the fastest growing US car company last year and likely will be the fastest growing company this year as well. You can see last year Tesla beat their EPS estimate, which was $3.07 for full year 2023. They actually came in at $3.62. For 2024, Wall Street is expecting $3.14 per share. So from the original estimate that was here for 2023 of $3.07, you're only expecting a 7-cent rise in 2024. And I mean, even from 1 month ago, really since Tesla reported their last earnings, expectations have plummeted from $3.77 for full year 2024 EPS to $3.14 for full year EPS in 2024. That is a huge re-rating in Tesla stock. Q1 2024 estimates for EPS 1 month ago were 79 cents. Today they are 67 cents. So again, this should be a pretty easy number to beat. Now, Tesla's stock is almost out of oversold territory on the RSI with the RSI of 29.53. If you can get into the 30s, which looks likely coming tomorrow, as long as this gain in after hours holds and we can add to that tomorrow morning, then you could break into a normal range, 30 or higher on the RSI, and that could trigger even more buying to start taking place from the algos, from retail investors that potentially sold, at 200 or 190 or even 175. A lot of people were spooked today and yesterday when Tesla stock was under 180. I didn't expect that we would stay there, and it doesn't look like we did. I mean, you're almost at $186 per share. But if you start to get some upside from here, my point is there's a lot of people that sold Tesla stock recently that probably jump back in. Even people that are not in Tesla stock, buying the stock right now looks a lot more attractive than it previously did when Tesla was in the mid or even high 200s a month or two ago. The MACD for Tesla also starting to improve quite a bit. The MACD line here, this yellow line, once it breaks above this blue line, is a very good positive indicator that we could get more momentum into Tesla stock. We'll have to wait and see if that happens, but you are seeing a bottoming here and a slight curling in this yellow MACD line, so it looks probable that that's going to happen. Let me know what you think about all of this information down below in the comment section. Let me know your thoughts on tomorrow's earnings with Wynn, Alibaba, with PayPal, all of those companies that will be reporting earnings. Thank you for watching. My name is Michael Tyler. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. Most importantly though, enjoy the rest of your day, and I will see you in the next one.